Welcome back, everybody, to another deep dive.
Yeah.
I am so excited for this one. We're going to be looking at Rajratan Global Wire, an Indian company that makes bead wire for tires. And we've got some really interesting research to dive into.
Yeah, I think it's a really exciting time for them, with their expansion plans and kind of everything that's going on in the world. So I think it's going to be a really interesting conversation.
Yeah, definitely. So to kick things off, what jumped out at you when you first kind of looked at these reports? What was the main thing that caught your eye?
Yeah, well, the first thing that really stood out to me was the chairman's message in the investor presentation. He's talking about how there's been a marked improvement in the company's performance, which is a pretty bold statement considering they've had some challenging quarters recently. And the numbers back them up, too. Their second quarter results show a 14% jump in revenue compared to the previous quarter.
Okay, so even with all the global uncertainty, like they mentioned the Red Sea, Gulf Coast, Iran, all this stuff, they're still seeing this surge in demand. What is driving that revenue growth besides the fact that, everyone needs tires?
Well, you're right. Everyone does need tires. And the demand for bead wire, which is basically the steel wire that reinforces tires, it's really outstripping supply right now. So, you've got fewer imports, likely due to all the global unrest that's happening. And at the same time, you have this increasing demand for tires as the global economy recovers. And that's creating kind of the perfect storm for a company like Rajratan.
It's like they're in the right place at the right time with the right product.
Exactly.
But it sounds like they're not just sitting back and watching the money roll in. They're actually taking some specific actions to seize this opportunity. What are some of those strategic moves that are kind of contributing to their success?
Yeah, absolutely. I mean, first of all, they're ramping up their exports, which makes sense considering the demand we're seeing in places like Europe and America. They've also secured a major new global customer, always a good sign.
That's huge.
Yeah. And then they're also, strategically commissioning their new plant in Chennai in India. And we'll get into that a little bit later.
Oh, yes.
Yeah.
Chennai plant.
Yeah.
That seems like a big deal. We'll definitely get into that.
It is a big deal.
But before we move on, I kind of want to understand the cost side of the equation. Revenue is great, but, how efficiently are they managing their expenses in this environment? Their raw materials, for example, steel prices can fluctuate wildly. How are they dealing with that?
Yeah, you're right. I mean, raw materials are a major factor for a company like this. Steel prices, they're volatile, and we can definitely see that reflected in their financial statements. But they are taking steps to try to mitigate this, and we'll get into that when we talk about their gross profit and margin.
Okay, so let's talk about the money they're actually making from their core operations, their gross profit.
Exactly. So it's not just about the revenue. It's about how much of that revenue translates into actual profit after you factor in the cost of producing the bead wire.
Right.
And in Rajratan's case, we are seeing their gross profit increasing year over year, which is encouraging.
Okay, that's a good sign.
Yeah.
But what about their gross margin? Is that improving as well? If their costs are rising, are they still able to maintain a healthy profit margin on each unit that they sell?
Yeah, their gross margin has also seen a little bit of improvement, which suggests that they're managing those production costs pretty well. I think it's likely a combination of, efficient operations that they have going on. And potentially they're also able to get higher selling prices. Remember that tight supply and high demand gives them a little bit more leverage.
More pricing power in the market.
Yeah.
So they're not just selling more, they're making more on each sale, which is great news for their bottom line.
Yeah.
But let's not get ahead of ourselves. We still need to consider their operating expenses. Things like, marketing and administration and those pesky logistics costs that they mentioned. How's that side of the picture looking?
Right, those pesky logistics costs.
Pesky.
Yeah, you can't ignore those. And they do mention those, increased logistics costs, longer delivery routes, higher oil prices, things like that. That's a real headwind that we're seeing for businesses globally.
Yeah.
It's affecting everyone. But even with those challenges, they're still managing to increase their gross profit and maintain a decent margin. So it sounds like they're running a pretty tight ship.
It does, yeah. And, it seems like their focus on operational efficiency is really paying off. Plus, they've got those import restrictions working in their favor, creating a good pricing environment. So this all points to a healthy operating income, which is basically, the profit generated from their core business after deducting those operating expenses.
Yeah.
Okay, so let's dig into that operating income then. Did it actually increase year over year, or did those logistics costs eat into it?
Mm-hmm.
And what about their operating margin, which basically tells us how much profit they're making for every dollar of revenue?
Yeah, so their operating income, it did actually see a year-over-year increase, and that's driven by that higher gross profit that we were just talking about.
Yeah.
And also, what looks like some pretty good control over their operating expenses.
Okay.
So this resulted in a slight improvement in their operating margin, which again is a positive sign. It shows they're operating efficiently. They're not just growing, they're growing profitably.
Okay, so they're making more money on each unit they sell, and they're keeping those operating expenses under control. That's music to any investor's ears,
Right.
right? But what about the bottom line? The net income. You mentioned earlier that their profit after tax surged by 25%. That's huge. What's the secret sauce behind that impressive bottom line performance?
Yeah, I think the secret sauce, as you put it, is really a blend of all the factors that we've been talking about. Higher revenue, those improved margins, and that disciplined approach to cost management. It seems like they're firing on all cylinders right now.
And that strong financial performance,
Mm.
it's got to be boosting their cash flow,
Mm.
right? I mean, cash is king, especially for a company that's investing in growth like Rajratan. Are they generating enough cash to fund their operations? And, crucially, their expansion plans, particularly this new Chennai plant.
Yeah, that's a great question. And while the investor presentation doesn't get into the nitty-gritty of quarterly cash flow numbers, we can make some educated guesses.
Okay.
Their increased profitability definitely points to a positive cash flow from operations. And, they're confidently investing in growth. That Chennai plant, it's a big undertaking, so it suggests that they're feeling pretty good about their ability to generate cash in the future.
That's a really good point. They're not shying away from spending money, but it seems strategic,
Mhm.
focused on long-term growth and efficiency. But big investments often require taking on debt. What's their debt situation looking like? Are they having to borrow more to fuel this expansion?
Well, they do mention a rise in interest expense compared to previous periods,
Yeah.
so it does suggest that they may have taken on some additional debt,
Okay.
which isn't necessarily a bad thing.
Yeah.
Companies often use debt strategically to finance growth, but it's definitely something that we'd want to keep an eye on. We'd need to dig a little deeper into their financials to get a full picture of their debt levels and see if it's within a comfortable range.
Right. Debt can be a powerful tool,
Hmm.
but it's all about balance.
Hmm.
So let's shift gears a little bit and look ahead.
Hmm.
What's Rajratan's outlook for the future?
Hmm.
Are they expecting this positive momentum to continue?
They are. They're projecting continued improvement, and they're attributing that to a few things. The full commercialization of the Chennai plant, once that comes online, increased utilization of their existing facilities, and they're still seeing a favorable demand environment. Okay.
So they seem pretty bullish, and rightfully so, I think, considering their recent performance and all the industry trends we've been talking about. They also highlighted a bunch of business strengthening initiatives, including going after additional certifications and aiming for the Deming Award in 5 years.
Wow.
These are pretty ambitious goals, but it really shows their commitment to operational excellence.
Ambitious, but it sounds achievable.
Yeah.
Now let's get into some of those key ratios. I know this stuff can seem a little technical, but it gives us some really valuable insights into a company's financial health and performance. What jumps out at you when you analyze Rajratan through this lens?
Yeah, I mean, we've already talked about their EBITDA and operating margins, which are both trending positively. But another important ratio is their return on equity, or ROE. And this basically measures how well they're using shareholder funds to generate profits.
Okay.
So a higher ROE means they're doing a good job at creating value for their investors.
Mm-hmm.
And while we don't have all the numbers in front of us to calculate that precisely, it's definitely a metric to keep in mind. Got it. So we've got strong margins, positive trends in operating income and net income, a focus on efficiency, ambitious goals. It seems like Rajratan has a lot going for it. But how do they stack up against the competition? Are they a dominant player in this bead wire market, or are they facing some fierce rivalry?
Well, they're definitely a leader, especially in India and Thailand, and they have a growing market share in both of those countries. And I think their strategic expansion, the emphasis on operational excellence, and their commitment to sustainability. Remember all those trees they're planting?
10,000 trees.
Yeah. All of that contributes to a really strong competitive position. They're not just competing, they're looking to lead.
That's exciting to hear. Their performance and their proactive approach, it's definitely a compelling picture. But as with any investment, you got to consider the risks and challenges that could impact their future performance. What are some of those factors that investors should be aware of?
Well, it's important to remember that no investment is completely risk-free. And one thing to consider with Rajratan is that the tire industry, it tends to be cyclical.
Okay.
So if the global economy were to slow down, the demand for tires and, of course, bead wire along with it it could weaken.
So even with their efficient operations and expansion, they're not totally immune to a global downturn.
Yeah.
What else should investors be watching out for?
Yeah, I mean, competition is always a factor.
Right.
While Rajratan is a leader, the bead wire industry is competitive.
Yeah.
So new players coming in or, existing rivals getting more aggressive, that could put some pressure on their market share and their pricing power.
Yeah, so they can't just like rest on their laurels. They've got to keep innovating and staying ahead of the game.
Right. And, they also need to make sure they execute that Chennai plant expansion smoothly.
Oh, yeah.
A project that size, it's always going to have some risks.
It's a big one.
And, we can't forget about the geopolitical uncertainties we talked about earlier.
Right. All the stuff in the Red Sea.
Yeah, disruptions in global trade or supply chains, those could have a big impact on their operations and their profitability.
It sounds like they have a lot to juggle. But their approach to managing these risks, like diversifying their customers and focusing on efficiency, it seems to be working for them.
Yeah, I agree. They're definitely aware of the challenges, and they seem to be taking steps to try to mitigate them. But it's definitely a balancing act.
Always is. Before we wrap up, I want to touch on their sustainability initiatives again.
Yeah.
It seems like more than just a side project for them. It seems like it's really embedded in their strategy.
I think you're right. It's not just a checkbox for them.
Yeah.
Their commitment to sustainability is impressive. Planting trees, aiming for net zero emissions, getting their recycled steel certified. It really sets a high bar for the industry.
And it's not just about, doing the right thing. It's also about building a resilient business for the long term.
Mhm.
And as we talked about, it can be good for business, attracting customers,
Mm.
reducing costs,
Yeah,
enhancing their reputation.
the win-win.
So as we leave our listeners to ponder the future of Rajratan, what's the one key takeaway you want them to remember?
I think the key takeaway here is that Rajratan Global Wire is a company that's well-positioned for growth. They're navigating a complex global landscape, and they're showing a real commitment to sustainability. They're definitely a company to watch, not just in the beadwire industry, but as an example of what responsible business can look like in the 21st century.
I love that too. Well said. I think this deep dive has given our listeners a really solid understanding of Rajratan's performance, their strategy, and their potential.
Yeah, I think so. With these insights, they're well equipped to follow Rajratan's journey and decide for themselves if it's an investment they want to make.
And that concludes our deep dive into Rajratan Global Wire. We'll be back soon with another fascinating company to explore. Until then, keep learning, keep asking questions, and keep diving deep.